Alright, let's talk about why this strategy works so well. It all comes down to the Trendline. It's a powerhouse tool for trading.
You serious?
Hey there, traders. Today we're diving into a simple but super effective trend following strategy. It uses 2 free TradingView indicators. I'll drop links to all the indicators and timestamps in the video description. Quick heads up.
What?
You might want to watch the whole video. I'll give you a few different options for your setup so you can pick what works best for you. Let's jump right in. As I mentioned, this is the trend following strategy, and we need to add the trend filter. This time, we're going to use the EMA Cloud 150-250 by Yo Adrian. This EMA Cloud indicator is designed to help traders identify the trend direction using 3 different exponential moving averages with customizable periods. Fast EMA, by default, set to 150 period. Medium EMA, by default, set to 200 period. Slow EMA, by default, set to 250 period. These values can be adjusted to suit your preference. Now this EMA cloud changes color to show you the trend. Let's make those colors pop a bit more. When the short EMA is above the long one and you see green, that's bullish. Time to think about buying. When it's the other way around and you see red, that's bearish. Maybe time to sell. We're going to use that medium EMA as an extra safety net. Change the fast EMA to 50, slow to 100, and medium to 200. I know it sounds backwards, but trust me, it works better this way. Make that medium EMA white and thicker so you can spot it easily. What we've done here is create an extra buffer. This will act as our main trend filter. The cloud ribbon part of this indicator will show us the intermediate trend direction. To filter our entries, we're adding our second indicator, and it's called Auto Trendline with Alert Taurus by Matsu Bitmex. As the name suggests, this indicator plots auto trend lines on a chart based on given settings. You can adjust the length, offset, highest, lowest source, as well as the crossover and cross under sources. Let's set the length to 25 for our strategy. I like to ditch those dotted lines and just keep the buy and sell signals. Looks cleaner, right?
What do you mean by that?
I'll explain why we don't need those lines in a sec. Okay, let's break down how to enter long and short positions. Going long. Make sure the ribbon is green and above that white 200 EMA. That's your uptrend. Wait for a pullback and a buy signal from the auto trendline indicator. Here's a pro tip. Draw your own trend line for extra confirmation. You might be thinking, why not use the auto trend lines from the indicator? Well, sometimes they connect to the wicks instead of the candle bodies, which isn't as reliable. Try switching to a line chart, connect the peaks, then flip back to candlesticks. That's why we ditch those dotted indicator lines. They can mess with your head. Going short, look for a red ribbon below the white 200 EMA. That's your downtrend. Wait for a price pullback, draw your trend line, and jump in when you get that sell signal from the auto trend line indicator. Let's talk about stop losses and taking profits. Remember how I said I'd show you a couple different ways to trade this? Here's the deal. The first way is pretty straightforward. You jump in on every pullback as long as everything else lines up. It's safer to aim for a 1 to 1.5 risk-reward ratio here. Once the price hits your target, lock in that profit and trail your stop as the price keeps moving your way. Now here's another way to play it. Instead of taking every signal, you can look for bigger breakouts from the range. Picture this. The price is bouncing around in a range, and a lot of those signals would have ended up losing you money.
You're broke! You're poor!
So instead, you wait it out. Wait for the price to break through that trend line, then enter on a pullback after you see a buy signal. When you do this, you can safely shoot for a bigger payoff, like a 1 to 2 or even 1 to 3 risk-reward ratio. So there you have it, a simple, effective strategy that uses the power of trend lines. Give it a shot and see how it works for you. Any questions? Drop them in the comments. Oh, and if you're wondering how to handle ranging markets, I've got you covered. Check out my recent video on that topic here right now.